Welcome back, ladies and gentlemen, to the Stock Market Show. This is your host Shades with a Patreon exclusive video. In this video, I'm going to go over the simplest technical analysis you've ever seen in your life. I'm going to start from the very beginning. I'm assuming you're a complete beginner. You have no idea what you're doing. That's what I'm assuming. I don't know. I should call this technical analysis for dummies, but I'd get sued, I'm sure. So I want you to open up a web page, and the first thing I want you to do is kindly type in Moomoo NX Desktop. Then I want you to go to where it says Moomoo Download Today. It looks like they're hacked. This looks like they're... Wait, are they hacked? No, they're not. I was like, huh? Okay, as you can see here, we got App Store, Google Play, Mac. If you have a Mac, you can still use Moomoo NX, and Windows. I have Windows, so you click on download and should start the download process. Once that is on your computer, then you should run the executable. Hopefully that's not too big of a word. Double click on it is probably the better way to put it. Double click on it and it should install it on your machine. Once it's installed, then let me just exit out. So once it's installed, this should pop up, or some variation of it, depending on the version that you have. Click on it and you should start seeing the exact same setup that I have. Now the first thing I want you to do is I want you to go to where it says custom, click on that, go to blank tab, and then on the right hand side there should be a add widget section. I want you to add a chart, and of course you need a watch list. Without a watch list, what are we trading? So click on trades, and then on analysis, and over here you have more tools. I'm just showing you, like, you got plenty of options here if you want to add more stuff, but for me, all you need, we're going to keep it simple, one chart, one watch list. Move the watch list to the left hand side all the way over here, and then exit out of this, move this to the far right, make sure it's taking up that other side of the screen, and there you go. That's it. That's all you need. Now you have the exact same setup that I have. From here, you can click on here where it says widget group. I want you to change that to a 1, and on the watch list, do the exact same thing. Click on it, change it to 1. Now when you click on the watch list side, the chart will change as well. So you can see it change it on the right hand side. Okay, now you have the exact same setup as I do, but you probably don't have a watch list. So you go up here to the search bar and you can just start looking up stocks, whatever they may be. So in this case, we're going to look up CYBL, because that one's the one that one in AITX has made people a lot of money just to start the year. So Sybil stock, whoever jumped in under a penny, they're in the green. If you bought in with me, you're up over 50% at this point. We're waiting to see if we can make that 100%er, and then we'll take our profit and have a good laugh because we just made 10K in the first week of trading. So now you have Sybil stock here, right? You looked it up, right? Sybil stock, you got Sybil here. If you want to add it to your watch list, you type it in again. So Sybil, you type it in, and then you click the heart, and it adds it to your watch list. As you can see, it popped up on the left hand side. So there you go. So now you have Sybil on your chart. Now I want you to go to the drawing tools here and click on it, and there's your drawing tools. We're going to get familiar with those. I just wanted to show you where that was at. You should have a volume indicator at the bottom. Leave it as is. As for the candles, if you don't see candles on your chart, go to where it says line type right here, these candles. Click on it, and you can pick either filled in candle or the hollow candle. It's the same thing. It's just a matter of preference. I like to use the hollow candles. So again, up to you if you want to follow me to a T. But there you go. Those are your options. Pick one of these two. I wouldn't recommend these other ones. It doesn't matter. Stick to these two, the tried and true. Okay, now you have the exact same chart. I think the only thing you might be missing is the MACD indicator. So go to indicators, and I want you to search MACD. and you should have it there. Slap it on the, it'll just add it to the bottom of the chart. Make it a little bigger, and then you'll notice if you hover over the letters MACD, you will see the settings section. Click on it, parameters, and change this from an 8 to a 4, and then click confirm, and now you have the exact same indicators that I do. Okay, now we can begin our technical analysis. I'm going to keep this short and sweet because this is the easiest technical analysis you'll ever see. I don't like to use complicated strategies. That's just silly. Keep it stupid simple. KISS. Okay, grab the rectangle tool. So remember, you can click here to access your drawing tools. Go to the triangle and scroll down to rectangle. And then the first thing I want you to do is you need to identify where the bottom is. How do you identify the bottom? The bottom is identified by finding where the price touched more than 2 times and then recovered after falling. So for example, the stock here, as you can see, it came up as high as 195, then came down as low as 55. So that's one touch. And then it moved to 95, then came back down to 6. Here is your bottom right here. You found the bottom. It touched it twice. We bought in here because I'm like, well, this is the second touch. Buyer stepped in last time and it moved like 30% plus. So, it kind of makes sense. Like, let's buy the bottom again, right? Now that we know where it is. And there you go. And that's how we're making money. We just identify where the bottom is. Where has the price touched twice after moving to a recent high? So this is the high, came down here. This is another high, came down here, and retested it. That is your bottom. And you can do this on any chart. Let's see. Let's go with SoundHound here. Where is the bottom here? The bottom right now is temporarily, at least, it's right here. You can see very clearly. The price keeps bouncing off of this area. But as you'll notice here, it's kind of looking a little ugly, right? Like it's kind of, there's a red candle. Red means the stock price is being pushed down by sellers and there's no buyers to be found. Green means buyers are in control of the share price, usually meaning we're going to go higher, right? So as you can see that clearly, there's more green candles than red. Just 2 red candles and a bunch of green candles. So buyers were in control. We continue to go higher. Now you'll notice it's the opposite here, right? 3, 4, 5 out of the 6 candles here, 5 are red, 1 is green. When there's more red candles than green at a bottom, it's time to exercise caution because that usually means we might break that bottom. Not all bottoms are going to hold. Sometimes they're going to break down. So when you see that, when you see way more red candles than green, exercise caution. Do not recommend buying the bottom at that point. So always check the number of candles. If there's way more red than green in the previous 5 days, probably not a good thing, especially if there's a big wick here. These wicks indicate that buyers tried to push up the price but failed to take control, and instead sellers ended the day strong. Okay, so there's the bottom. We buy at the bottom. If it goes lower, we take the loss and move on. We take the small loss. So let's go back to Sybil here. So hypothetically, we bought at the bottom right. Now we would set a stop loss to protect our account from destruction. That's how you protect yourself. So you bought here and you would set a stop underneath the lowest point it got to. Moomoo will actually tell you where the lowest point was. So let me just hide the, yeah, there you go. So there's the lowest point. Moomoo will show you that. The lowest point recently was at 0052. So we would set a stop loss at 005. And I'm going to mark that with this line here. So I'm going to grab a horizontal line, click on that, and I'm going to just plaster it. Boom, there's your, oops, where is it? Why didn't it not appear? Okay, something seems off here. I should, okay, there we go. So there it is, right there. There's your stop loss. I'm going to change that to yellow. So that's where you would set your protection to avoid holding a bag all the way down to triple zeros, because then you're just going to get destroyed. So that's where you set your stop. If it comes down there, You take the loss and you smile because thank you, stock market gods, for only taking a little bit of my money and not a lot of it. Too many people think of taking a loss as a bad thing. If it takes you out, that means the bottom's going to break more than likely. It's best to get out and not, you know, end up writing it down from like 2 cents to 0.005s. Anyone who bought up here is holding a big bag right now. And they're happy because, oh my God, I hope it comes back up for them. You don't want to be one of those people. You want to be the opposite. You buy in, you set a stop loss, it pumps. Other people push up the price for you. You make your money and laugh. I mean, that's what we're doing. We're laughing at others. Like, look at those suckers chasing when we bought it when no one wanted it. No one wanted it. That's the mentality I'm trying to teach you. So it's also mental. It's not just so much the technical analysis, it's also the mental aspect. Okay, so now we have a game plan here, essentially. Where are we buying? At the bottom. We're waiting for around 0.005s to 0.007s. We set a stop loss at 0.05. Now we know where to buy, where's our protection. Now, where do we take profits? Okay, so if you guys saw my video today on Sybil, you know I took profit I took half off the table at around 0.009s. So here you go. I'm gonna grab my horizontal line tool again, and I'm gonna mark this level as a take profit level, and I'm gonna change that to red. That's a take profit level. How do you identify take profit levels? You look at where the price recently got pushed down. So it reached a high here, right, of 9.4, and it got pushed down to our bottom where we bought in, right? We bought in, we're like, ooh, you're giving it to me cheap, yay. And then it came back to that previous high. And we can sell all our position here, or half if you believe it's going to go higher. Now, because I believe it's going to go higher, I only sold half, and I'm holding the other half for more. And now we set our second sell target, which would be, we would have to go wait. Now we have to go back in time. Like, let's see where let's see where it previously broke the bottom. Where did it previously break a bottom? So you can see here, it had a bottom right here. It touched it once, touched it twice, and then it broke down. So our second sell target is going to be right here, around here. So I would round it up to 0.12. Sometimes you have to round up or down because it is a penny stock. And there's your second sell target right there. Now, it's easy for me to do this because I'm experienced. You're just going to have to get in there and get your, sparring done. Like too many people treat the stock market like it's the easiest thing ever. I'm just going to go into the stock market and make lots of money. It's so easy. But it's like going into boxing thinking you're all that because you fought on the streets, and then you get it. You've seen those videos where some guy comes in thinking he's all hot, and then he gets put up against a coach or some fighter, and the guy just gets humbled, to put it nicely. Kind of like that. Like, the market will humble you. You will not be lucky every single time. Eventually you will destroy yourself if you don't have a game plan. So too many people just treat the market like, oh, it's going to be the easiest thing ever, and they just get destroyed. Unfortunately, boxing, you get destroyed right away. So you learn real quick, like, yeah, I don't belong in the gym. You know what I'm saying? I'm not talking from experience. I was actually good at boxing when I was younger. But anyways, that is your second sell target, 1, 2. And we can actually look for a third one. And that third one would be up here at 195. Now, that's a stretch. I'd be surprised if it came up that high. But as of right now, we took half here, and we can take the other half and be content with our 100% gains and our 50%, or we can be content with our 30% gains here and then like our 80-ish percent gains here. But if it continues going higher, then, I mean, the sky's the limit, right? So when it comes to profit taking, you can either take profit off of levels and just be content with what the market gives you, or you can hold and hope, like, hey, I hope it goes, up here. I hope it goes to the moon. But I don't like hoping. Where are the levels? Where's the bottom? There's the bottom. I buy there. Where's my stop loss? Down there underneath the lowest point that I got to. And then where are my sell targets? I sell there. Either I take half or all of it, or I take half here, and then maybe if it goes higher, I take another half. I'm out. I'm out. I made my 30 to 80%, and I'm good, right? If it goes to the moon, oh well, I still made my 30 to 80%. Some people have to break out of that mindset of, oh no, I missed out. If only I had held for more. Be content with 30 to 80%. That's already better than most people holding the S&P 500. Let me show you that. The average return for the S&P 500, which for those of you who don't know, the S&P 500 is it holds the top 500 companies. So if you don't want to pick stocks, you just buy the S&P 500 because it has 500 stocks in it, and the chances of you losing money are very little because it gives you about a 10% return on average. As you can see here, when people talk about the market, they're referring to the performance of the S&P 500 index. Since 1957, this benchmark index has delivered an average annual return of over 10%. So you can play it safe and just get your 10% every year, or you can take a little more risk with trading, right? So that's kind of like the benefits of that ETF. The benefits of that ETF is that you don't have to really like be trading or anything. You don't have to be watching YouTube videos. You just put your money in and you're content with your 10% every year. But when you're making like 30 to 80%, too many people are just like, oh man, that's so little. I want more. They're so greedy. Don't be greedy. You're already, by making even 20%, you're already making more than the people who just, they just put money into the S&P 500 because they just want the guaranteed 10%, quote unquote, guaranteed 10% every year on average. And they just don't, they're just so risk averse. They would just rather not touch anything else. They don't even want to pick stocks or trade or anything. They just, I want my 10% and I'm good. So you're already outperforming those people by taking 20% in literally the beginning of the year. So just want to give you that perspective. Too many people, they're just so greedy. Okay, that's it. I think that's it, right? I showed you where to set your sell targets, where to buy at the bottom, how to find the bottom, how to identify uh, sell targets and the bottom, and where to set your stop. So I'm just going to do one more chart just to, just so you might have to watch this several times. It's easy for me to point and be like, oh, look, it's so easy. No, it's not. It's kind of like I said, it's like boxing. You got to put in your rounds. Every day is an opportunity to put in your sparring rounds and get better. But if you don't put in the work, then you're just not going to ever get on my level of technical analysis. And you can get on my level. Like I said, it's not anything genius. It's just that most people in the world don't have discipline and patience, and that's all it takes. But unfortunately, people don't have that. I don't know why. Okay, so where's the bottom, guys? I'm not even gonna say. Where's the bottom? Do you see the bottom? I see the bottom. If you've watched my Sybil videos and AIT's videos, you probably know already. That's right. The bottom is down here. Now I'm going to change that to green. So there's your bottom. Where do we set our stop loss? We set it underneath 002. And there's your stop loss. We're going to change that to yellow. And finally, we identify our sell targets. And you can see that the stock loves to go here. That's where we previously got pushed down, right? Right here. So there you go. There's your first sell target. First sell target. Your next sell target would be this one right here, but clearly we just destroyed through that level. And then your third sell target would be up here. So you kind of just work backwards in time to figure out where the next sell targets are. So there's your next sell target. Now this stock could maybe potentially go to 006s. That's the next sell target. So there you go. I just showed you very quickly. I could do this in less than a minute. But like you're a beginner, so don't expect to, like be on my level. Like too many people it's like too many people want to be Mayweather, but they don't even want to put in the work. You know what I'm saying? Like too many people. Let me use Street Fighter 6 as an example. Too many people want to play Street Fighter and get to the master rank. They want to be a master rank player, but not want to grind through rookie and silver and bronze and all those levels. They just want to skyrocket to master level. They want to be a master level, high level player in the markets without putting in the work. So I just want to reiterate that. I'm just using boxing and Street Fighter 6 as examples. So there you go. There's your game plan. That's it. That's all there is to it. Probably the biggest rule is always buy the bottom, never chase. Never chase. If it's not at the bottom, don't buy it. Don't chase it. Leave it alone. Wait till it comes back down, because it usually does more often than not. And that's it for the video. There's your technical analysis. I'll see you guys in the next one. If you're waiting for the MACD strategy, I will be coming out with that one later in the week, because I'm going to make another video going over how to use the Discord to your advantage, because I'm having an influx of members and subscribers, and I need to make sure that everyone's on the same page, because some people are confused, lost as to how the Discord is run. And the Discord is growing so much so with new members every day that it's like, it's not unmanageable, but I need to make sure that everyone's on the same page. So look out for the MACD strategy video later in the week. I will be coming out with the Discord and how to use it video, the proper etiquette, I guess, video, uh, later in the day today. All right, guys. There's no like button to hit, so because this is for Patreon. All right, guys. I'll see you in the next one. I'll see you in the Discord.